Hey, welcome back to the International Wealth Builders Association radio talk show. I'm your host, Toya Tillet on KCAA Broadcasting Network, or Broadcasting Radio. I am here with my special guest, Briana Prince, the founder of Tillet. So she's here telling us all about life insurance and creating legacies and, just having a way to protect ourselves and our assets as well as our families in the event of, an unfortunate situation, an untimely death or, a death that comes naturally or however it happens. You definitely want to be prepared in any scenario. So, Briana.
Absolutely.
What's next for you?
What's next? So right now, I'm actually focusing on building my agency.
Nice.
So what that's going to look like essentially is getting a whole team together to help grow this business.
Okay.
Yeah. So that's going to, that's primarily what I'm focusing on right now. So getting other agents to partner with me. I'm actually working with a new IMO, but you most people don't understand that term unless you're in the industry.
Heard of it.
Oh,
okay,
that's surprising. Okay, great.
Yes.
Yeah, so just working on building my agency. Yeah, so that way we can impact more people. Because one thing that I've learned is that there's a huge lack of education within the life insurance industry. I would say probably over 95% of people that I meet with don't know what they have. Yeah, and that can be problematic.
Yeah,
when you don't know what you have.
That is true. That is true. So what other kind of products do you offer? We talked about the mortgage protection. Okay. You touched on the term. Are there any other fun ones out there? Like I've been hearing about this universal whole life policy.
Yes. So those are two different types of policies. You have universal life insurance, or the big one that I'm pretty confident you're talking about is called an index universal life, or in other words, an IUL. Okay. And then also a whole life policy. Okay. So to keep things as simple as possible, the original, like I mentioned earlier, there's two main types. You have term life insurance and then whole life. Okay. If ever you get confused between the term is temporary, whole life is for your whole life.
Whole life. Okay, gotcha. Just like I said. Okay.
Exactly. It's funny. So I like to keep it simple that way, so that's easy to understand. Right. But with IULs versus whole life, they're both what you call permanent life insurance policies. But, I tell people, make sure you do your research. Just because I heard about IULs probably, I think that was 2016 when I first heard about it. Okay. Of course, like I said, whole life policies are the original ones. So those ones have been around forever. Right. Right. So the whole idea with the whole life policy is for it to last you for the rest of your life. It builds up cash value. So basically, as you're paying on your monthly premiums or annual premiums, a percentage of that goes to your cash value and it builds up over time. Okay. So that's with the traditional whole life policy. With an IUL, the greatest thing with a traditional universal life, let's start there, is that it offers a lot of flexibility. Okay. Now that flexibility, in my opinion, also is its greatest downfall in those policies. Just because, and I say that because with IULs, the huge difference between that and whole life is the fact that with whole life, you have all guarantees. With IULs, you don't have those guarantees. So what it is that they use the performance of an index like S&P 500 to credit the policy. Okay. So it's not like your money is directly invested in the policy, but it uses it as a watermark for the policy. And with an IUL, the cost of insurance goes up every single year. Basically, what it is that it does. You don't know that because it's built into the policy. Oh, gotcha. But the cost of insurance goes up every year. So basically, it's like buying what's called an annual renewable term, which means that every single year the term period renews. So within your policy, it's buying like, let's say, for example, I'm 30. Let's say I take out an IUL right now. So, and assuming that my IUL, I'm just going to use easy numbers and say $100,000. Okay. So if it's a $100,000 policy, then it's crediting as if the cost of insurance is going to be for $100,000 for a 30-year-old female. That's what it's crediting. Okay. So let's say that's going to cost $50 a month. I don't know. Okay. I'm just using easy numbers.
Yes.
Now, next year, I'm 31. So now my policy, and it's still $100,000. So now, instead of paying $50, now it's $53. Oh. The next year, I'm 32. And so it goes up every single year. On a whole life policy, it takes the average cost or average life expectancy and divides it, and so it's always consistent. It never changes.
Okay,
That's
so
why
it's like a fixed term, like kind of like a fixed mortgage.
Yeah, I guess you could see it that way. Yeah.
Okay.
So with that being said, you have those guarantees, and it's automatically factored in. You don't have those fluctuations that exist within there.
Right.
So it is a bit of a complex level if you're talking about like the infinite banking concept. And I know that's a huge thing, and I know that's probably what you're talking about right now.
I thought about that one too. Yes.
Yeah. So I like facts, right? You know,
of course.
I say that. I've been saying that all day because it's true. I like facts. Number one, with an IUL, the way it's structured, same thing. If you structure the whole life, it can be structured essentially the same, but they work very differently.
Okay.
Again, with the whole life, you'll have those guarantees. With the IUL, you do not. So the way you want to set it up is so that you have the least amount. You want to buy the least, because generally when people want those policies, they're more focused on the cash value buildups than the death benefit. Gotcha. So you want to buy the least amount of life insurance for the highest amount of cash value.
Least amount of life insurance for the highest amount of cash value.
Yeah.
Okay.
So, and to offset it, you can add a term rider into it to make sure that you have enough life insurance that you need, blah, blah, blah.
Right.
But essentially, that's the structure that you want to look at when you're looking at these policies. And so when you're looking at the policies and minimizing that death benefit for the maximum cash value, what you're doing is allowing your policy to grow over time, right? Okay. So with the crediting method on an IUL, it does use the performance of an index. I will say this. I'm not a huge fan of IULs because it's too unpredictable. Okay. It hasn't been around long enough. And there's agents who will absolutely disagree. That's why I tell people, like, when you're looking, do your research. Don't rely on one agent. I like facts and numbers. You don't have that with IULs, generally speaking. And again, one of my biggest concerns with it is that if you end up living too long, because it would be great, probably would work pretty great if you die prematurely. Okay. But long term is where I fear. And the reason, a lot of that just comes from my history with universal lives in general. The traditional history of how universal lives first started out was, like in the 80s, late 80s, early 90s, well, up until to early 2000s, actually, they were pushing traditional universal lives. Like they were like crazy.
I remember that period where they were kind of pushing it really hard.
Yeah. And they I think they were crediting ridiculous amount, like 10% interest. Yeah, it was something a crazy amount of. And so people were thinking that interest rates were, because back then interest rates were super high. Right. And they thought that was going to last forever, but then it didn't. And so all of a sudden, 15, 20 years later, people are getting letters in the mail from the insurance company saying, hey, if you want to keep your policy, you need to pay 3 times more, and then it's going to change every single year thereafter. Like, wow. Yeah, it just gets to be ridiculous. And so I've looked over a lot of policies with the traditional universal life policies, and I just personally feel like with the IULs, this is just another hype with not enough facts to back it. Okay. Now, I'm not saying that they won't work out long term. It is a possibility that it might. Right. But no one can say for sure that it will. Okay. And my concern is that what happens if people end up living too long? And that's where I'm hesitant on. I like the whole life approach a lot better just because you have those guarantees. The policy's not going to end up expiring on you or anything like that. Right. And it's consistent. It is consistent.
Okay, so I see. So now we know the difference between the whole life, the term, and the IULs. So, if you're looking for consistency, your choice may be the whole life. If you want to take a risk and kind of jump into some extra stuff, you might try the IUL.
I definitely just say, make sure you do your research first before you do anything. Talk to multiple agents, get their perspective. Because it's a lot easier to go over that kind of information when I have an illustration in front of me. That way I can point out the differences between the two.
Okay.
And that's for any agent.
So that's for any agent. Okay. So you can get an illustration. I've actually had one of those done before.
Oh, yeah?
Yeah.
They're pretty cool.
Another agent.
Very complex, but it's great.
With. Yeah. And I was just like, okay, that's great. It's pretty. I have no idea what you're talking about.
I know. Most people don't, but, I think it's so important to make sure that you absolutely understand your policy, because at the end of the day, if you don't understand it, when you're not around, I doubt your family's going to understand it.
Right, exactly. So definitely want to make sure it's understandable. I would just, like for me, I would have the insurance agent talk to me and like my kids.
Ask questions.
Yeah.
Yeah.
Like, and I talk to all of us together, so that way as I'm learning it and understanding it, they're learning and understanding at the same time.
I tell people all the time, it's more important for your beneficiary to know what you have than it is for you.
Right, exactly. Because it's like I can have it all in his head, but once I'm gone, doesn't help y'all.
You're not going to be able to speak for the policy anymore. So,
right. Definitely. All right, so we're getting pretty close to our time here, so we're going to take our last commercial break, and we're going to come back and talk some more with Briana and a new project that she's working on. We're going to talk about that. All right, see y'all in about 2 minutes.